All right. Good morning, trade pros. Welcome to our morning market update for Thursday, September the 13th of 2018. This is George Papsov, Trade Pro Academy. And right over there on the other side is Marky. Marky boy. His his first name is Marky and his last name is Mark. Uh, yeah. No relation to Wahlberg at all. He's not a Wahlberger. All right, so in today's morning market update, we're going to talk about a lot. So let me cut the jokes and fun stuff aside and let's get down to business. We got Bank of England from the UK's monetary report update. We have some news on the Brexit front. We also have, what else do we have? We have ECB's Mario Draghi, who's speaking behind me at the moment. We also have contract rollover coming up. So let's get down to business. Got a lot to talk about. First and foremost, get those passports out. We're going for a tour around the world. In Asia, Japan's up 1%. Hong Kong's up 2.5 percentage points. China up 1.2%. India up 0.8%. Asian markets green across the board. After having a somewhat downside day to start yesterday, we ripped right back up. We closed near the highs, and overnight, we didn't really let go any of that momentum. We continued up to the 2,900 level on the September contract on the SPOO. So bullish momentum in this market, and I got a feeling today we continue to go to the bullish side. All right, so today's a buying the dips day. Try the rallies. They're going to be lower risk, higher probability for you throughout the day session. So let's get started let's continue. Let's go to Europe. Midday, London's down 0.3%. Oh, by the way, before I do that, there's a reason the Asian equities are up, and we'll cover that in a moment. At midday, London's down 0.3%. Paris is up 0.2. Frankfurt's up 0.5 percentage point. So you can see bullish momentum in Europe as well, but slightly lower, actually a lot lower than the Asian session and the Asian market open. All right, and then in the United States, Dow is up 0.2%. S&P's up 0.3. Nasdaq, the leader, and it usually is. That's why it's a strong correlatory market up for us, up 0.6 percentage point today. So tech stocks are holding a bid a little bit firmer than all other equity markets. All right. First of all, why are the Asian markets rallying? Before we get into the central bank talk, Donald Trump's administration has invited Chinese officials to start trade talks once again. You guys don't know this because it's not reported very often in the Western media outlets. China and Russia have been having talks the last couple weeks and saying that they do not accept non-bilateral trade talks, which means they're not going to accept an action from somebody that's not justified or spoken with the other party first. Basically, China went to Russia and said, hey, Russia, you got our back. And Russia said, yes, we do in this trade war. So that's what happened. Now Donald Trump's trying to open the conversation channel with China to make some kind of progress out of these trade talks. That's according to Larry Kudlow, and that's coming as Washington and Donald Trump's preparing to slap $200 billion of sanctions and considering more tariffs to another $267 billion. So this news that the two parties are likely going to start talking again is putting a bid into the market that was already trying to rebound from the lows. So that puts adds on or tax on to the bullish sentiment. All right. This happens after some of the mid-level U.S. and Chinese officials came to no progress after having talks August 22nd, 23rd. Sounds like they're ready to sit at the table again and hash something out this time around. All right, so that's the update. That's just putting momentum into the Asian equities, and that's what's kind of spilling over to the U.S. market. So it's a risk-on type of atmosphere, which means people are buying risk assets and selling safe havens like gold, etc., and they're buying equities. All right. What else do we got? Crude oil's down 1.3%. Gold's down 0.1% as well. And Bitcoin's up 1.7%, hanging around the mid 6,000 level where it's comfortable sitting at the moment, consolidating. And that's fine. All right. Cryptocurrency traders are used to a lot of movement, but in a lot of markets, we have stability. And stability is actually good for a market. It shows supply and demand are balancing out. It's starting to price information in fairly. And institutional money starts to jump in when things balance out, and that's really good for the underlying asset. So this is good news for crypto that's hanging around here without major fluctuations, because now it could fulfill its purpose for being an actual currency. All right. Okay. I'm going to probably save this for tomorrow. I wrote a lot of notes, but we got to get moving because we got a lot to cover today. Today is rollover for equities. What do we mean? It means that the market's going to roll over in its bed and not wake up. No, that's not what it means. It means we're trading the September contract currently, and that September contract expires tomorrow for all equities. S&P 500, all of them listed on the CME, S&P 500, Dow, Russell, NASDAQ. All right, so we're going to be flipping over to the next quarterly contract. The next contract is not October, it's December. And that currency code is Z. Just to let you guys know, H is March, all right? M is June, U is September, and Z is December. That's the contract months for the expirations. It spells hummus with a Z. Hummus, so you remember it. So we're flipping to the Z's. What's happening throughout today is a lot of institutional money will start rolling their positions forward from the September contract to the December contract. So you're going to likely get elevated volume, but after a morning rush, you're probably going to get some more sideways price action. All right, because they're selling one contract, buying the other. These rollovers cause inadvertent volatility in volume, but it doesn't typically correlate to big opportunity. All right, so tomorrow's the quad witch. You got to know that. All right, let's move forward. Are we trading the Z or the U, you might wonder today? We're going to trade the U today, but tomorrow we're on the Z contract. I'm going to be following both to see where the volume is. Look at the September, look at the December. Whichever one's got more volume, that's where the professional money's at. Today I checked it, 229 to 129, so about 100,000 more trading on the September still. That's what I'm going to trade. All right. All right, 8:30 initial jobless claims came out at 204,000 versus 210,000, so less people filed for unemployment than expected in the previous week, which is great. However, the prior number was revised higher, which is not that great. So that report becomes kind of a wash. August CPI out of the United States, remember this is a measure of inflation, came out at 0.2% versus 0.3%. So inflation is now lower, but minus food and energy, it's 0.1% versus 0.2%. So both the core and the headline number both dropped in inflation. That's not good for the Fed. All right. The Fed always believes that, look, the Fed's putting all this money in the market through their bond programs, through their stimulus programs. They have a massive balance sheet and they still can't get inflation going. That's a problem for the Fed. All right. So that number kind of surprised traders a little bit. For the rest of the day, 10:30, we got natural gas inventory. 12:30 p.m., we got Fed's Bostic speaking. 1 p.m., results of a $15 billion 30-year note auction. 2 p.m., Treasury budget. And 4:30 p.m., money supply. So we got a lot of news coming out today. All right. You got to have a newswire. A newswire is a live reading of the news that comes out. It collects from different sources, amalgamates, and spits it out to you as a trader. So you have to be out there clicking through Twitter and through Bloomberg, through Reuters, all that stuff. It comes at a cost, but my God, is it worth it? You could pay your trade the news subscription literally with one trade on one day for the whole year with that news service. All right. Let's talk about Bank of England. Bank of England left everything unchanged as expected. We call that UNCH in the business. In the business, we got an UNCH report, unchanged. All right. They leave rates at 0.75%. Asset purchase target at 435 billion. Vote 9-0. Everyone 4. So there's no real surprise there. Nothing to talk about. All right. Here's a statement they made, though. They said financial markets signaling greater uncertainty about future developments in the withdrawal process from Brexit. Any future increases in bank rate are likely to be at a gradual pace and to a limited extent. All right. So they're reaffirming their dovish stance, which means, look, market, we're not going to start raising interest rates. You don't have to worry. We're watching this Brexit situation. You're all right. You got time and space. Just relax. That's what they pretty much said to the equity market. Higher interest rates put downside pressure on stocks. All right, borrowing costs go up for corporations, profitability drops, and therefore stock prices drop as well. That's sort of the chain of events. So that's what the Bank of England said. Now, what they said about their business conditions is this. Consumer spending is supported by warm weather. So they're discounting that. We had really strong consumer spending out of the UK, but they're saying that's due to good weather. And the reason they're saying that is to be able to justify their previous statement and say we're not raising interest rates. Because they're like, we're not raising interest rates, but the economy is doing phenomenal, and there's no reason to believe it's not going to continue to do great, then you should be raising interest rates. So what a lot of traders don't realize is the central bank used to work for the economy. The central bank is now 100% employed by the market. They won't ever tell you this, but they're doing things to support the market. They don't care about the economy. Believe me, they really don't. What they care about is the equity market and sustaining it. All right. I can't believe you heard that in the free broadcast, because that's something you got to really deeply understand to be able to really get that statement. Anywho, that's what they said. They said that business reports tighter cost control due to Brexit uncertainty, which is a neutral statement, but interesting. Investment plans for the next 12 months softened due to economic and political uncertainty focused on Brexit. So they quoted the Brexit uncertainty as the reason that they're not making a move, and they're saying other businesses feel the same way that we do. All right, so now it justifies that dovish stance. Dovish, meaning less interest rate hikes, would lead to a lower currency. Therefore, the pound should be going down. Marky, is the pound selling off right now? Marky's going to check for us. I didn't have time to check. Really busy morning. I was probably going up a little bit. It's bidding a little bit across the board, and that's how these currency markets go. All right, let's go and talk into the Brexit situation now. I'm not going to have time to do this whole update. I'm going to have to turn around and leave the rest of it for the trading room, but I will finish off on this note. The Bank of, not the Bank of England, the UK government is meeting this morning at the moment for 3 hours to discuss the eventuality of a no-deal Brexit. The fact that the government is meeting to talk about what would happen in the situation that there's no Brexit makes it seem likely. All right. They're considering this outcome as a lot more likely. The cutoff is the end of March of 2019. And the closer we get to that deadline, the more likely it is that they don't exit the euro fully. All right. So there hasn't been a Brexit yet. That's the discussion. They're meeting this morning for 3 hours. That's why the pound's bid, Marky, because they're talking about an outcome of no Brexit. No Brexit means less uncertainty. Less uncertainty is good for a currency. It goes up. All right. You guys got to follow that chain. So that's happening today, that 3 hour meeting. And Brexit chief Dominic Raab warned yesterday that the UK will not pay the so-called £39 billion divorce bill if the UK does not leave the European Union. All right, so that's interesting. So they could save $39 billion if they go through a soft Brexit rather than a hard Brexit. All right, not hard, but hard. That's what I got for you guys today. I got to cut it off. I'll save the Mario Draghi comments for the trading room. He's still talking, so these comments I have are outdated anyway. So I'm going to give you guys a full report, turn around, talk to the trading room, set some trading levels, and make it go out of today. We're going to have a great opportunity. Stay to the upside early on. Look for an early morning, maybe head fake sell-off. We got to let go of some of these buyers who are accumulated near the top. Let's run some sell stops early on, early morning reversal, and we're going to bid this thing into the close. That's my forecast. Have a great day. Manage your risk, trade like a trade pro. See you guys tomorrow. Thanks for tuning in, and have a wonderful trading session. Goodbye. All right, trade pros, let me tell you about Mario Draghi here, and let's set up some trades. Currency markets are always sitting on the edge of their seats for Mario Draghi. He's a fireworks type presenter. You always expect anything out of him, and usually he doesn't disappoint. Let's go through and look